Hi everybody, my name is Paul Buitink and welcome to this weekly Bitcoin show. My co-host today is Roland de Groei, who runs the oldest and most successful Bitcoin site in the Netherlands, bitcoinspot.nl. And our guest today is monetary, gold and Bitcoin expert Trace Mayer, who was one of the first bloggers to and Bitcoin when the price was just $0.25. He's also an active investor and invested in companies like Armory, Kraken and Bitpay. He runs sites like runtogold.com and howtovanish.com and also hosts the Bitcoin Knowledge podcast show. Trace, it's good to have you on the show. Welcome.
Oh, great to be here, Paul and Roland.
Thank you.
We know each other like 5 years or so, probably like that, something like that. At first, we were both very much focused on gold. I remember a GATA conference in the summer of 11 when spot gold was surging to new record highs, and we had a big party there. So before we talk about crypto, what kind of role do you expect gold to play in the future financial system?
Well, I think it's very important to understand that at all times and in all circumstances, gold remains money. It's perhaps the most important money in the world. And being in the center of the financial solar system, as it is, I don't really think it's going to lose that dominant position anytime soon. It's been there for thousands and thousands of years. Where I see Bitcoin interacting with gold is that, in these three ages of money and currency, we've had commodity money like gold, we've had fiat currency like dollars and euros, then we have Bitcoin. Well, gold is limited in amount, but it's not extensible. And fiat currencies, they're extensible, but they're not limited in amount. With the cryptocurrencies, we have something that's both limited in amount and extensible. And so, we can really carve off and distinguish between the asset itself and the payment system or the ability to communicate that value over a communications channel. And so, where Bitcoin's going to lead, whether gold's going to get obsoleted or I think it depends on the particular use cases, but either way, we're in uncharted territory with this new technological advance, and it's going to be extremely exciting to see how it plays out, not just over the next couple of years, but over the next couple decades.
Right, because we saw about more than a year ago, we saw the Bitcoin price briefly going higher than 1 troy ounce of gold. Do you expect that to happen again soon?
I mean, soon is all relative. I think that Bitcoin could be in this consolidation phase and this, you could say, bear market for a little bit while longer. We've got mining. We've got that's increasing the float of saleable Bitcoins. We've got the block reward halving that's going to be coming up. We've got merchant adoption and acceptance. But really the big wild card is regulation. When regulation really gets cleared out of the way and we're able to have corporate America hold Bitcoin in their treasury positions, that's when we're going to see, I believe, the big melt up in the Bitcoin price, if it does melt up, where it goes from, say, $200 to tens of thousands of dollars. It's going to require that type of adoption into our current monetary system, and everything's being laid on for the groundwork for that. The merchants are going to be able to just flip a switch and they'll be accepting Bitcoin, and naturally they're going to need to hold a portion of their cash balances in Bitcoin to pay suppliers, to receive payments from customers, just like they hold dollars and euros, etc. And you look at just one company, look at just Apple. They've got $178 billion of cash on their balance sheet, and if they allocated, just a couple of percentage points of that cash into Bitcoin, because we know from Overstock.com that it's about 1% of transactions get paid with Bitcoin, you're looking at needing to move $1 to $2 billion into cash, from dollars or euros into Bitcoin in the treasury balance, and there's just not enough saleable Bitcoin at these prices to allow something like that to happen. So of course it's going to be a function of price, and that's all going to be decided by the regulatory environment.
Trade, talking about regulation, how did the Bitcoin Investment Trust get their product on the market when the Winklevoss twins are still struggling to get their trust on the market? Or is it a whole different kind of animal, the Bitcoin Investment Trust, and what the Winklevoss twins are trying to do?
Well, the Winklevoss twins, they always seem to be a day late and a buck short. But really, all joking aside, I think they're going after a different type of product than the Bitcoin Investment Trust. With the Bit, there's
It's OTC market, right?
yeah, it's an OTC market. It's a pink sheet, and so what can happen is when you have these shares that are sold to the sold privately, after a 12-month lockup period, they can then be sold on the pink sheets or something like this. And so FINRA said that they approved the Bit to be sold in that type of a way, and so it's really kind of a hack around the actual process. But once it gets out there and it gets trading and there's not a big mess with it, and hopefully then we'll see the regulators with the Winklevoss's ETF probably be a lot more comfortable, and we'll probably see other tools coming out in other jurisdictions as well.
So is the Bit Nasdaq, or what do you call it, Wall Street ready, or is it just for the small investor?
I mean, it's a pink sheet. You consider it a penny stock, so I mean, it's not like you're going to want to. If you have a hedge fund, if you have a mutual fund or an index fund that's trading the S&P or big blue chip companies, you wouldn't want to allocate capital to that. But if you have a very wide mandate and lots of latitude, then yeah, anybody who wants to trade an instrument to get exposure to the Bitcoin price, then I think that the Bit would be a good one to trade.
So people could make it a part of their 401k, for example.
I'm not sure on the specifics if you can buy the OTC in your 401k or your Roth IRA or something like that, but yeah, I mean, assuming that you can buy that type of an instrument, then yeah, I mean, that'd be great, because if it's in your Roth IRA, for example, then you wouldn't have the capital gains issues, which would be really nice not to have to deal with.
Right. So basically, you're saying regulation is a potential threat, but it could also be an opportunity, possibly. How do you compare regulation in the States with that of Europe?
Well, the Bit license is kind of grabbing all the attention and headlines in the States, but it's still in comment period, and we've got California wanting to come out with regulation. We've got Texas taking a very hands-off approach to it. We've got several states where they just don't have a money transmission requirement at all. And so, you don't even need regulation or a license in those states, places like New Mexico, Montana, other places. So the U.S., it's really almost like the U.S. is the new Europe. We've got 50 different markets, and they've all got different rules. It's really kind of not how it's usually done here in the U.S. As far as Europe goes, we've got the Isle of Man being extremely friendly towards Bitcoin. I actually interviewed Brian Donegan from the Isle of Man government, and they're passing this Proceeds of Crime Act. They want to keep crime out. They want to protect customer funds. I think those are two great mandates. They did the same type of thing with online gaming, and now it accounts for something like 10% of GDP over there. Then we've got Singapore. I actually helped a couple years ago draft a letter with an attorney to Moss, and we got back tax guidance and things like that. So Singapore, great. If you want to have your hedge fund and you want to recognize your capital gains or losses in Singapore, wonderful environment to do that in. We've got Hong Kong. ANX is trading over there. They got a Hong Kong money service business license. Took them only a couple months to get it. And then Japan has completely cleared the way. I know with Crackin, one of the companies I'm invested in, we were awarded the Mt. Gox receivership, and part of that has been educating government and figuring out, what the legal landscape will be over there, because at Crackin we only do stuff legally compliantly, and Japan has just cleared the way. So we see Asia really kind of leading the charge along with Isle of Man. Then we've got the Netherlands, I think, being very friendly towards
It's very
Bitcoin.
mild, yeah. It's very indecisive still, so
Still indecisive.
Yeah, which is good, of course, for us. But
Well, now you
Kraken,
can pay. I'm sorry. And now
just
in
one more thing
the
about Kraken. Kraken is currently only in Europe still, or they're not yet in the States, right? Are you guys planning on opening up to customers in the States as well?
Yeah, in any of the states where we can operate in a legally compliant manner, like New Mexico or Montana, Kraken does take customers. For people that really want to go and get an account, you could actually form a New Mexico LLC, and it only costs like $75, and it's a one-time registration fee, and you can have a registered agent, and you could do that and get your Kraken account all up and running very easily. So there are, where there's a will, there's a way.
It doesn't sound easy, though. If you have to open that first and have to pay in $70 or so, it doesn't sound like an easy solution for, at least for a consumer. Of course,
not for the consumer, but if you're thinking you want to run an arbitrage bot or something between Bitfinex and Bitstamp and Kraken, or you're running a remittance business or something like that, and you need to access the liquidity pools at Kraken, then there's a will, there's a way.
Yeah. So how is the investment landscape a little bit at the moment in the Bitcoin space? Because one of your investments. Netejo, it's a UK exchange. They closed their doors recently because of a lack of funds or growth. Not sure what the real reason was, but that was in the UK, which is a very competitive market, of course. There's quite a few different players in the UK. But if I look at the volumes of Kraken and then the fees that Kraken makes, then it's hardly enough to pay for all the bills, I guess. Or how do you see the investment landscape? How do you make a return, or when is there an exit for an investor in Bitcoin land?
Not really an area for exits yet. I mean, Coinbase, Bitpay, they're a couple of the shining lights. Coinbase just raised $75 million. It was the first round with real traditional financial investors like New York Stock Exchange, etc. So, I mean, yeah, I guess we've had one exit with Authy in the space, and I guess Gift also would count as an exit sort of in the space. But otherwise, I mean, we're still very early days in Bitcoin. With Kraken, we're going to be introducing margin trading here pretty soon. But investors, they need to understand that this is definitely kind of a long game. We're probably not going to be seeing significant exits for another 3 to 5 years. Going back to Netejo, we've just decided to kind of pivot in terms of the business model, and it's actually something that I've personally been writing about needing since about 2009 on my blog Run to Gold. And now that we're in these negative and zero interest rate policy environment, it's really become I think almost an essential product offering that's going to need to come out. So people can kind of stay tuned for that. I don't want to give away the business secret to everybody quite yet, but I think it could end up being quite the solution, not just for the negative interest rates that we see out there, but also for a lot of our Bitcoin exchanges. So I think it could be quite fun. And the exchange market is very competitive, and there's network effects. So I think they gave it a good shot. They didn't lose any customer funds or giving everybody their money back, but I think there's easier ways to make some money, and we also need kind of this comparative advantage and specialization to happen in the space. So I think we're going to see some consolidation, and we're going to see more specialization, and that's all going to be very positive for the growth of the industry as a whole.
And how come the euro market is so much smaller than the dollar market then? For if you look at the volumes in the euro Bitcoin market and compare it to the volumes in the US dollar Bitcoin markets, it's just a fraction of it. For example, Kraken is the biggest one in the euro market. It's like an average volume of 4,000 or 5,000 Bitcoins a day. And of course, that's much less than some of the players do in the dollar market.
Well, I guess Americans just have more money to dabble with magic internet money, right? And those poor Europeans. No, I think a lot of the Europeans probably trade the dollar pair, and there's a lot of calculation that goes on with the dollar pair, and it's network effects. And so, when there's not volume on a particular pair or exchange, it's difficult to get other people to come trade there. But we are starting to see a migration of whales from both Bitstamp and Bitfinex over to Kraken. Last week I spent about 16 hours a day for 5 days in the Kraken offices, and we're helping these people get Tier 4 verified so they can trade the largest amounts, and the Tier 4 accounts are actually growing at a significant rate, faster than the Tier 2 and the Tier 3 accounts. So I think that's very positive for people getting themselves positioned to take advantage of the liquidity that's going to be over at Kraken. And at the end of the day, we want to have a lot of strong liquid exchanges. That's very helpful for the Bitcoin ecosystem as a whole to have more redundancy in that area.
So, Trace, I was watching some of your old podcasts this week, and I could state that you I guess that you lit up the Bitcoin fire within me. I guess you're a good evangelist. So it was nice to see all those old videos, because I've been in Bitcoin from, I guess, the start of 2011, something like that. And one of the early things I was interested in is the libertarians and the libertarian view on Bitcoin. And one of the things that struck me in the start was I met a lot of libertarians who said, well, Bitcoin cannot work because the regression theorem. I was just pummeled to death with the regression theorem. It can never work. And I was like, well, it is working, so good luck with your theorem. So, and I was watching one of your videos, and you said, well, Bitcoin doesn't really violate the regression theorem, because Bitcoin is generated with electricity. Electricity costs money. So I was wondering what your views on that, because for me it was like, well, I know it really violates the regression theorem, but I like the theory so much that, well, I'm going to twist it around a little bit so that it doesn't violate the regression theorem. But maybe I'm seeing it the wrong way, if you understand what I'm getting at.
Yeah, I mean, at the end of the day, like, the regression theorem is merely that. It's just a theorem. It's trying to explain why we use particular instruments as currency, like why humanities decide to give them value. And it's decided to trace them back. You know, we use Federal Reserve notes because they used to be convertible for gold, and we use those gold certificates because we could convert them to gold at any time, and then we got those from bank house receipts, and we got gold, and we took gold because it was shiny and people would use it for jewelry. So that's kind of the regression theorem. As far as it applies to Bitcoin, you know, Bitcoin, even when it was held merely as a collectible, you know, maybe somebody liked the fact that they had these particular digits. You know, Satoshi liked these digits or whatever, and they had just the tiniest fraction of a value. That still is imputed value. So at the end of the day, it's all about the subjective value theory. We value things for whatever reason. We can't really get into the heart of why individuals value things, only that they do value things and they have a preference of one good over another, and that shows itself in the pricing mechanism, in the way people perform economic calculation. And so, you know, to have somebody assert that something can't work because it violates the regression theorem, well, obviously that thing that can't work is working, so that theorem needs to be modified, or somehow your understanding of it has to be better improved. And one thing that I think is particularly interesting, and it sort of ties into the question about the libertarians and cryptocurrencies and whatnot, it's that these cryptocurrencies, because they're extensible, it's almost like we're able to create these units, and then we try to figure out a utility for them. And then when we find a utility, we can actually extensify the units to make them even more useful to carry out that particular utility. And it's almost the opposite of the regression theorem. We take something and we find a value or a use case for it, which is really just the entrepreneurial process at work. And I'm finding it very exciting. Things like ring signatures, zero-knowledge proofs, snarks, things of that nature, side chains, Shadow.cash, for example, the new white paper that came out. I mean, a lot of this stuff is very exciting in terms of groundbreaking cryptography being applied to financial tech, things of that nature, and it might be where the libertarians are going to need to go if Bitcoin gets much more regulated and brought into the mainstream. And so as we build out cyberspace, I think everything will kind of flow through Bitcoin one way or the other, just like when we built out America, all the rivers and tributaries and lakes flowed through Manhattan as the central point. And so, you know, that's one of the reasons New York got such a dominant position. And so likewise, I think Bitcoin is going to have a very dominant position because it's at the mouth of this entire new nation of cyberspace that we can develop out and create value in.
Yeah, so that brings us basically to the next point, Trace. How do you look at some of these alternative protocols out there, the ones that are not related directly to Bitcoin, for example, NXT or Ethereum? Some of these networks. Do you invest in them too? How do you look at them?
Yeah, I mean, I got some made safe coins, for example. I got those in the IPO, so they're up both in Bitcoin and in dollar. For the most part, though, I don't really tinker around with the altcoins. I think there's a lot of I think they're to be looked at kind of like R&D, and it's a good place to lose a lot of money. And it's going to be very difficult to overcome the network effects of Bitcoin itself. And even if one of these altcoins were to have a really great technical innovation, why not just have a pull request and bring it into Bitcoin? And so I'm very excited about this new sidechains project. In fact, right before the call, I was on Skype talking with Dr. Adam Back about some of these things. So, I'm very excited about sidechains and the potential that that has for creating an environment where we can have a development process for upgrading Bitcoin and not have to worry about breaking the whole network system. We can go experiment off in the side chain, and if it works, then we can pull it back into Bitcoin. Because we need to find a way to safely extensify the protocol.
Talking about keeping it safe, we know you're an early investor in Armory. There's a lot of happening in Armory. Can you give us a little update? And maybe for the audience who doesn't know what Armory is.
Yeah, so Armory was founded by Alan Reiner in early 2011. It was the first implementation of cold storage Bitcoins. You could say it was almost a fork of the core client. The core client was able to focus on the network security, and Armory began focusing on wallet security. I seed funded the Armory with a $500,000 investment in like mid 2013, and since that time we've been building out enterprise grade Bitcoin security solutions. And about 8 months ago, we brought on a fellow named John Velisarios. He had spent 11 years at Accenture running one of their cryptography groups, securing keys for stock exchanges and other tier 1 financial institutions. And so now we're building out the software that then John V can build out all the policies and procedures around, so that institutional level tier 1 financial institutions, things like that, can come in and have a Bitcoin security solution. And that's going to be foundational before we can get things like multi-billion-dollar insurance policies on Bitcoin holdings, for example. And that's going to be it's great because this version 9.3, even though there were some minor bugs with it, none of the actual cryptography was at fault. We've got new functionality like Supernode, multi-signature, cold storage, lockboxes is completely decentralized in the sense that you can manage the keys all with their own security profile. We've got fragmented backups. We're going to have a new user interface for the enterprise clients called Multicrypt. So there's a lot of innovation going on at Armory. If anybody's got an enterprise security need, like, come on over, check the guys out, see if we can help you out, whether you're an exchange or whatever. If you're handling the private keys, like, you got to respect them. And as one of our developers was asked, he's like, well, why should I use Armory? And he responded, because whoever steals your Bitcoins will.
You got to respect the private keys. That's a very important rule to live by.
And John V had actually been entrusted with protecting the most valuable and the most important private keys in the world while he was at Accenture. So, I mean, he's got the experience to build the plan that enterprise level users need. And that's just foundational for our industry to grow. The security is the foundation everybody else builds on.
Yeah.
Where can people go if they want to learn about Armory?
Their site's bitcoinarmory.com. We got lots of video tutorials on how to use it. It's free, open source, at least like the consumer level version.
We got a question, by the way, Trace, about Armory from Wouter Meijer, one of the listeners, and he asks, is it still necessary to have a very strong computer to run Armory? I remember that somewhere in 2013 there was a plan to make a much more lighter version, asks Wouter.
Yeah, currently you still need to run Bitcoin QT, the core Bitcoin, and then you run Armory on top of it. So that's for the online computer. For the offline computer where you're just doing the signing, then no, you don't you don't need to, that computer can be pretty lightweight. But yeah, to be running the full core and then Armory itself, because Armory creates its own database that's about twice the size of Core's database, yeah, that computer's going to need some horsepower. But it's very important in terms of privacy for that to happen, because when you're trusting somebody else's node, well, when you're trusting their version of the blockchain, you could be deceived. But with Armory, you can't. You know, and you're also not leaking balance queries of particular addresses that you're looking up. So, you know, that could also pose a security risk for people. And we do plan to have, you know, lightweight clients out sometime in 2015, and also SPV clients, and maybe if we get to it, mobile version also.
Cool. Hey, Trace, you also invested in Bitcoin Magazine. It was one of the earlier investments you did, and I remember us meeting up in London one day with Mihai a few years ago. The magazine was sold, I think, to new shareholders. Are you still part of the shareholders, or have you divested?
We sold the entire BitcoinMagazine.com to Why Bitcoin, which is David Bailey's print magazine that gets handed out for free at all the conferences, and I'm working on a deal over there, so hopefully I'll get to get that finalized and finished up and help take that forward, because I think he's doing great work over there. Shipped over 100,000 copies of the physical magazine in December, so that's really helpful for the industry.
All right. Okay, let's wrap up. Maybe one more item is Holland, because you spoke last year at a conference in Holland, the National Bitcoin Congress, organized by IntoBitcoin.com, Rutger van Zuidam and the guys. Holland is still quite a hot spot for Bitcoin. We have, of course, the Bitpay European headquarters in Amsterdam. We have Arnhem, which is the city with the most Bitcoin merchants per habitant or per square meter, something like that. And Roland, maybe you can tell a bit more. You run the most popular and oldest Bitcoin site in Holland, bitcoinspot.nl. How do you currently see the market in Holland? How's your traffic? Can you tell a bit more about the situation in Holland?
Well, you think behind the scenes things are quite heating up. Just today I saw an article about a Dutch, I don't know if I pronounce correctly, a lawyer magazine, who had a headline like, why do we bother about Bitcoin? Because Bitcoin is bothering us. It's getting bigger. There are now, someone's going to give a course in Bitcoin. A Dutch tax lawyer is going to do that. Right now, if you do your taxes, you have actually a checkbox in our online tax program to do your taxes on the amount of bitcoins that you have. So behind the scenes, it's getting quite big, but I think in the mainstream it's quite slow catching up, because well, it's all about the price, I guess. If the price goes up, then the visitors on the site go up, and because like I said, behind the scenes there's a lot happening. The base is broadening, so to speak. There are a lot of new interested people, a lot of new startups, people building wallets. Like you said, in Arnhem, there are a lot of new Bitcoin acceptance. So I guess if, how you say it, if the base is broad enough, then I guess if the price will go up, I think it will go up in the future. Then we could see a quite dramatic increase in popularity.
Yeah, so the traffic on your website that's very much related to price movement. So if price goes up, then you see more traffic. If price is steady or going down, you see less traffic.
Yeah, my site is more how do you call it, oriented on a layman. So people mainly come from my site from a little bit of news and for pricing information, because the hardcore Bitcoin people, well, they're already on Reddit and Bitcoin Talk forums. So if the visitors on my site, they flock in when the price goes up, so to speak, because like in begin 2014, when the price was about 900 euros, I had almost 20 to 30,000 visitors a day. So, and now it's about 1,000. So.
Okay, that's from 20,000 to 1,000. That's a huge difference.
Well, I'm just gonna say everybody loves to chase the rabbit. and we got a huge base for this next price movement.
Yeah, and it's mass psychology. But when I got into Bitcoins in early 2011, I heard about Bitcoins on the Max Kaiser podcast when it was like a few dollars, and then a few weeks later it was $20. And then I thought, well, I'm gonna ride this train, and then you know how it goes down a rabbit hole, and I really got interested. But you see that with a lot of people who come to visit my site. They sometimes visit it, and I see the price go up, and they'll be like, wow, maybe I should get into this. And then my mailbox starts overflowing with people asking me for price advice and buying advice, and well, it gets interesting quite fast.
For price advice, you can send them to Trace, because Trace, the first time you recommended it was how much? A quarter?
Oh, it was like a nickel or a quarter. Yeah. And I'd actually say it's the market is so much healthier now because we got so much more volume. You know, we do more volume now in a day in some cases than we did in the entire year back in 2012, 2011. So, you know, that's very positive for the ecosystem as a whole.
Right.
In the first bubble, I was the only Bitcoin website in Holland. So I guess next time around it will be a lot of different. But I never give buying advice. So I always tell people, look it up, see what Bitcoin is, get interested, and if you want to buy it. If you don't. But don't come crying later.
Oh, and I've had plenty of people come crying. In fact, just in January, one guy showed him how to use Bitcoin 3 years ago, and he never actually followed through and figured out how to secure coins and whatnot. In January, he sent me an email. He wanted to buy $500,000 worth of coins. They were about when they hit the bottom, right? 190 now, basically. But he wasn't in a he hadn't developed the human capital, the skill to be able to buy that amount of Bitcoin. And as a result, with the price where it's at now, it's about $300,000 in gains that he missed out on. So he knew what he wanted to buy. He had the money to buy it. He had everything in place except the human capital to do it. And because of his Bitcoin ignorance, because he hadn't prepared himself for the last 3 years, even though he knew about it, he missed out on $300,000 profit. Yeah, I mean, don't come crying to me. He was whining. He's like, oh, it's so hard to buy on Coinbase. Why? And I was like, look, you'll figure out how to do it if you want to.
Yeah, great. Anything else, Trace, you want to add to the conversation before we finish the podcast?
Just, you know, we just got to keep on keeping on. You know, everything is moving along just very well. Now is a great time to buy, in my opinion. I think Bitcoin's currently undervalued relative to all the work and everything that's gone into it and the utility and value that's added. And so now's the time to get those cheap Bitcoins. You know, it's probably by design so that 50,000 block of the Marshalls that's being auctioned today could be acquired. And you know, we might see movement here pretty soon. Either way, it's going to be higher in 5 or 10 years than it is now. And I think that largely the network effects have taken such deep hold that Bitcoin's past the point of no return, and it will be the primary protocol for transferring value in the information age. And so, like, you know, now it's just a matter of doing the hard work.
Yeah, and if it doesn't work out, then don't cry.
Yeah, but I'd say the probability that it doesn't work out is very, very low at this point.
Okay, and where can people find you, Trace? What's the best place to find you?
Yeah, www.bitcoin.kn, at Trace Mayer on Twitter, all over the place.
Right. Well, thanks so much, Trace, for being on the show, and also Roland, thanks for being on the show today.
No, thanks.
And let's do it again in the future.
Yeah, thanks for having us, you two.
See ya.
Okay,
Bye.
thank you. Bye.
Ciao.